two teams play, one win, one loses. We don't know who wins or who loses. Obviously, there's analytics behind it, but then the betting aspect, it doesn't generate as much value. I mean, of course, there's the whole industry behind it with gambling as keys. Of course, that can hire people and build wealth too. But generally, it's not in the business of producing valuable things for society. So I think about the cathedral concept that way, if that makes sense.
Yeah,
Yeah.
absolutely. And I think Apple is a great example there as well. I feel like there's always a debate. Okay, you're a growth investor or you're a value investor, and to me, there's just no difference between growth investing versus value investing.
Yeah.
If you're not value investing, then what are you doing? There is a reasonable price or the right price to say for growth. Right? If you're just paying too high of a price for growth, then you're not investing. You're speculating to be growing faster than what already is baked in the price.
Yep.
A certain price imply a certain growth rate.
Yep.
And you have to buy that growth for cheap too.
Yep.
Think of Apple as a great example, right? And when Buffett bought it, right,
Yep.
it was below 10 times earnings.
Yep. Yep.
And that company will still grow. So you can buy good and great businesses. And that's why the market nowadays doesn't seem to be very efficient at all time. Right? You will find those dislocations that will allow you to buy great businesses at reasonable or even great prices. And you're paying for that growth. If you're paying $1 for that growth versus you're paying 50 cents for that growth, obviously the latter is better. So I do think that for value investing versus growth investing, I think you should always resort back to value investing because it's all coming down back to price over value. If you're just overpaying for the value you got, well, sorry, you just got the short end of the stick.